everyone. Welcome to Life with Amadchique. And today we will be talking about three ways you could build generational wealth as a Nigerian immigrant. I don't know why I said Nigerian. Well, I am Nigerian, but it definitely could apply to other immigrants on how you could build that generational wealth. So, what is generational wealth? Well, let's get into it. Generational wealth, as I understand it, is having wealth that transcends generation. I mean, how else can you describe that? I'm sure the dictionary has a fancy meaning, but listen, it's, I don't know, 9 p.m. and I'm trying to do this and go to bed. So, here is a quick summary. You want to have wealth that your children, your children's children can benefit from. And many times it may not necessarily be an amount of money set aside. It could be things that you have done in your life to ease your children that if they don't spend money on those sort of things on you, they would have enough to build their lives. So I'm going to talk about three ways that you could do that to set up generational wealth for your family. And this video is geared for people thinking about starting a family. Even if you're single and if you're married, some of you may be doing this already. Some of you may not. I don't know why you are not, but let's get into it. The first thing I'm going to talk about, and mind you, this is my personal experience. This is, will I say, kind of what I have done. And I don't claim to know it all. And I'm not like some big financial guru, but I know that I have taken some steps and to make sure that I start that generational wealth with my husband and with my children, and definitely thinking about their children's children. And the first thing here is having a life insurance policy. Personally, we opted to go for the whole life versus a term life. And people can get into, I say, a debate on why do you get a whole life versus a term life. Our decisions was based on pretty much what a whole life offers. So with a term life, yes, it is cheaper. It is very affordable, like very, very affordable. You may be doing like a $30 monthly payment. But in a term life, you get like a policy for 30 years. And what are the chances that, we know by statistics that people live longer. We all pray for a long life. And there are chances that, let's say, if I got a term life policy at 30 years old, and at 60, I would have paid the 30 years. And then what happens is, after you've paid for 30 years and you're still alive, the insurance company would renegotiate prices at your current age. And we know when you're older, you have some comorbidities, or you may not have any comorbidities, but by the nature that you're older and death is knocking on your door and you will be gone soon, you would not be paying that $30 monthly. They are going to renegotiate at a higher price, and usually those prices are astronomical. And knowing that you're going to be going into retirement, you're going to have a fixed income, you may not be able to afford what that premium would be at that age. However, check out whole life. In a whole life insurance, yes, your premium is higher. It could run anywhere in the 200s to 300s monthly. But let me tell you, yes, you could get your whole life for like 30 years, for 15 years, or however you want it. But when you are done at the end of those 30 years, your policy doesn't expire. The whole life insurance adds into it what we call the cash value. Now, I really cannot fully explain that. I am no insurance agent, but pretty much what I understand is that the cash value you build on that insurance, when you are done paying for that premium at the end of 30 years, your cash value actually starts paying for the insurance. So your policy never lapses. So when you have a whole life, it is really whole life. There is no renegotiation. When you get to a certain age, your insurance will never lapse. So it is the judgment for you to make. What is better for you and what is better for your family? And, I would say really consider the whole life. And yes, you may not be covered for $1 million like a term life, but money is money. Any little amount that you could pay for would go to some things upon your demise. The other way you could build generational wealth is by setting up a college tuition account. They call it a 529 tax savings account. It's always 529 something. Some can be run by the state. Some banks have it. Some financial institutions offer it. You Google it, you could see a lot of things there. And there is it's a type of investment account. You put in money, the money is invested, and you choose your risk. You choose, really, you could talk to a financial advisor about this. But the point is that you're putting away some money for college for your kids, and no matter how little, you may not be able to save for all their college tuition, but you are adding something. You are helping to set your kids up for success. If you are smart and you are able to talk to your children and you're able to save an amount of money that can afford them to go to a 4-year college that is in state where tuition is very reasonable, there are chances that your kid could live at home, commute from home, and pay only tuition. All that money you saved can go to their tuition, where your child wouldn't have to take any loan to stay in a dorm. At least, I hope my kids, they're not staying in any dormitory. They would be going from home, and I don't mind. I could create a whole space for them to have their space, but I would really tell them there is no point in taking a loan to go live on campus. Honestly, dorm life is overrated. I know. I will get into another YouTube video on how I convinced my younger sister not to go live on campus. But anyway, saving for tuition will help relieve your children of some burden where they don't have to take loans. And if they do, it could be a small amount. So every little thing helps, that when they graduate college, they are not being killed by all these loans and all this interest, because in some way you have set them up for failure. Not for failure, for success. And the last thing you could do, having a will. And when I mean a will, not like a will, the one they're going to read when you die. And I know, it's not in our nature to think about this. It's not in our nature to think about death, but I certainly do think about it. I definitely talk about it. I definitely may or may not have a will. I cannot confirm or deny that because this is a YouTube video. But anywho, you can create a will. Start allocating those little things you think you have. The house you have, you could say who could get it. You could say how it will be shared. You could say what needs to be done with it, even if you didn't pay off the mortgage upon your demise. You could talk about who gets the cars. You could make your will right now and edit it as you go along, so that there is no drama upon your demise. It doesn't have to end up in probate court where you're going to spend all these legal fees, which would depreciate your wealth. And at the end, your descendants get very little. So make that will today. Make it. Get on Microsoft Word and start typing something today. All a will needs is actually to be notarized in front of, some notary republic to make it to have some officialness to it. I mean, of course, you could call lawyers. There are other things that you could do, but just start today. I mean, of course, there are other things that you could do to build generational wealth. You could have investment properties. You could have a business that you could live for your children. You could have rental properties. There are, those things definitely exist. And if you're a working professional making money, I'm sure those ideas would have crossed into your head. And lastly, please, you could win a lotto, and we don't even need to have this conversation on the 3 ways to build generational wealth. I hit a lotto of 300 million. Listen, my children, descendants and descendants and descendants and sons of Abraham and Jacob are set for life. So, let me go play that lotto, guys. Thanks for watching. See you later.